All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I want to break down this term that you often hear spoken by traders, right? They all talk about at this level, okay? A level is defining an area of support or resistance. And there's lots of different ways levels, per se, can be identified. And I want to kind of go into that thought process with you a little bit in this video. Support and resistance can be defined by a lot of different approaches to the market. Okay, I come from a very classically trained approach to the market, and by classically meaning ascending and descending channel structures is where I have found my kind of niche in the market as far as identifying support and resistance. And I'm not saying that that's the only way to do it. I'm saying that having a full understanding of many different ways to find these levels of interest are quite important. So let's kind of dive into, what my thought process here is on this, so that you kind of have a better view. Again, this is Home Cheapo, 1 week chart, and we can look at this from a couple different perspectives. I'm going to just kind of dial right into this price action right here because this jumps out to me. All right, this trend line here, make that a little less thick. Like that trend line there is meaningful to me. I have resistance, I have resistance, I have resistance, I have resistance. Here's my break. Now notice with each passing week, this level changes, right? It is descending. So as it continues to descend with each passing week, it gets lower and lower and lower. Okay, that's just the way that's just one of many ways that I like to. I'm a big fan of channel structures. Okay, so that completes a channel structure. And notice this low became very predictable by being able to properly identify the channel top. Okay, a lot of you I see just kind of do this. They're like, you get kind of really just kind of wild here with your trend lines. Okay, yeah. Okay, you just pick a low and a new low and you just draw a line. Spend some time. Be intentional about the trend lines that you draw. Make sure that there's meaning to them. Right? Like this trend line I drew up top here was very meaningful. Meaningful in the sense it was descending, meaningful in the sense that it found a lot of reasons that there was resistance, meaningful that upon that break that we did have meaningful push to the upside, and then meaningful when cloned into a channel structure, we were able to appoint future support. Okay? Properly drawing a trend line and creating a channel structure is about being able to effectively find future areas of support and resistance. So that is just one very entry level, simplistic way of kind of using a trend line, creating a channel structure to identify resistance on the top, support on the bottom, and predict what future price action may very well do. So that's one way, okay? Like that's one of my preferred ways, in all honesty. And then there's just kind of lines on the chart, right? Like, all right, like I just like that level, right? That level right there. We got a really clean, clear, defined bottom, double bottom here, right? And then price pushes higher. Okay, so like that's a level. Now, if I wanted to take that level and say, all right, that's, and we want to create a demand zone or a support zone, I would come in here and I would seek this low, and I would probably put something in place that looked something like that. All right, this fell just a little bit short of it. I usually use the body and the wick. That would make this kind of a little bit large, but that would really kind of clarify. So, this is the level, quote unquote. we placed that double bottom. I used the wick of that candle that created that low right here on the week of June 21st, 2022. I used the bottom wick. I used the body of the candle. You could see we came back into this area. We found support or demand, depending on kind of the terminology that you're used to. They mean both the same thing. Price drove higher. We came back again, found support, came back again, found support or demand. Came back, found support or demand. So this is a viable level. This is a viable zone, rather, okay? It represents an area, whereas this line that is residing here at these lows would have just represented a level, a very specific level. Now, as you kind of venture along throughout your trading career, you're going to recognize that price, whether it's a 5-minute chart, a 1-minute chart, a weekly chart, a monthly chart, reacts to an area, okay? Even when I draw a trend line or a channel structure, price is going to react to the area around that trend line or channel structure if drawn properly. Well, you can see in this instance here, we have a very, very clear, defined demand zone or support zone. And this area has represented buyers, 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 buyers. Right? That's what it did. Okay? Let's take a look at a level here, right? We got these tops right here. So you can see we made this push higher, right? Boom, seller stepped right back in. Come back up again. We push a little deeper. Seller step back in. Violated a couple more times. Seller step back in. Violated a few more times. Seller step back in. All right? Price finally breaks it, comes back. I would call that a little short of retesting. But notice where we are right now. Right? So this is a level. 333.25 is a level. Does it mean that price is going to react exactly to it? No, but it's representing an area that price is likely to react to. Okay? And you could kind of throw a couple lines here, you know, all the way at that wick. You could throw another one here at this wick. All right, throw another one here. All right, like you can kind of stagger these in, but recognizing that it's nothing more than just an area, right? That level. But notice, if I dump all three of these, and I just come back to the original line that I plotted on the chart, it has been resistance until proven otherwise when it became support. And if this is a key level for Home Depot to potentially rally off of, well, perhaps that's what we have here. Okay? So there's lots of unique ways to identify the levels. What else do I see, right? Because this is what I do for a living. I stare at charts in order to place what? A high probability of what could potentially happen next. Now, I have a descending trend line that could represent a level of potential support if we break 333, right? And notice, as time goes on, what happens to that level? It continues to get lower, 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 lower. So if we take a big bounce back up here, we set a lower high, and then we go to set a lower low, our expectation would probably be a test of this trend line. Right? Makes viable sense. So when you are hearing this word level being thrown around by lots of traders, this is coming from a perspective of traditional type support and resistance. That can be defined by a single line. It can be defined by a trend line. It can be defined by a channel structure. It can be defined by supply or demand, via support or resistance, whichever you technically want to call it. But supply and demand represents an area, okay? A line in the market represents a very specific place that price is likely to react around, as opposed to where there's a zone where price is likely to react within. So what do we do when we get to these levels that everybody's talking about? Everyone wants to talk about, oh, now all these levels, right? Everyone uses this fancy term of levels. The level's great. And yes, you absolutely, positively, without a shadow of a doubt, need to understand what these levels are, how to find them, when, where, and how they populate, and what they mean. And you have to do it with a great deal of accuracy. So if you don't understand finding support and resistance via either key price points, trend lines, channel structures, supply and demand zones, whatever, that is like, the absolute back to the basics, right? You should be able to mark up a chart and go, okay, I drew one single line here and prices react to it a whole bunch of times. It's pretty meaningful. I should probably leave it on the chart. Okay? Or I drew a demand zone here and prices react to it several times. I should leave it on the chart because price may react to it again in the future. Now, that's just kind of the beginning, right? The next step is, what is the interaction between buyers and sellers at those levels, right? What is the price action telling us? What is the volume telling us? Can we, with a deal of certainty, with a great deal of certainty, say, okay, prices come to this level. What now gives me the probability of it doing what I potentially expect it to do? Right? What's the probability of this happening? Okay. You can see this candle right here. There is a lot of selling, right? You got high selling volume, and you can see price pushed up and pushed all the way back down. So there was a lot of selling pressure that brought price down there. Okay. Notice here we had an increase in volume, but we closed in like the bottom 50% of the overall move. So that's pretty weak. Increase in volume, closed in the bottom 10% of the overall move. That's pretty weak. Increase in volume, and we closed lower. Okay, that's pretty weak. Very slight increase in volume, and we failed to close above this prior attempt. It's pretty weak. When we come down here to the bottom, notice we have an increase in selling volume in this very specific candle, yet we failed to close below the prior candle that was much larger in size with less volume. That, to me, tells me that the sellers are being absorbed, and there's a chance that we're going to start to find support in and around this area. Now, did it reverse right that second? No. More often than not, it's not going to. But I now have the next piece of the story, the next piece of the puzzle. Right? I've identified support or demand. I've identified price action. I've identified volume. Right? Like now I'm starting to say, okay, there's a chance that I have several components here. There's a chance that buyers are going to step in and try to push things higher. Notice what happens here. That price tries, it makes the lowest wick here into the demand zone, and the highest buying volume pushes price back up into the top 20% of that candle. So that tells me what? There's super strong buying interest right here on this very specific candle. Right there. So if I'm watching this area, I'm seeing that the selling is failing. And then I see this very aggressive buying come in with this deep push into the demand zone, and then it gets driven all the way back up, that's when I'm starting to feel really convinced that the turnaround may be starting to happen. Now, where do you think I want to trade to? Well, I definitely want to take my profit on this gap, okay? So right here, as we fill this little gap, that's definitely my first profit-taking area. And then, where do I want to go? Back to that magical level or line that I drew on the chart that has had so much reaction to it. And guess where? Guess where? Just guess where? Guess where price stopped going higher? At the magical level, right? Guess when you would have known that price was more than likely to retrace? Right here. Highest volume printed at this level, right? That keyword we keep coming back to, level, that everybody's talking about on YouTube and Instagram and all this other stuff. The level, right? This level. Increased selling volume, the highest volume print at the level, and price fails to push any higher, and it just rolls over. The buyers had their chance to overtake the level, and they couldn't do it. And guess what? The buying depleted, the selling started to increase, took us straight back down in to where? Oh, right here. Okay? Notice as we come into demand, there's no new increase in selling volume. The sellers run out of steam and the buyers step back in. Guess what happens? Price pushes back to the magical level. But at the magical level, we get this very strong surge in buying with a big candle. No wicks, all body. That's a super strong sign. Here's the retest, and there's the continuation. So, getting your level or your support and resistance or your demand and supply or your channel structures and trend lines in place is extraordinarily imperative, because nothing else, you can't identify what price and volume are doing until you understand when, where, and why they should or shouldn't be doing something. So you have to identify it, whether it's trend lines, just horizontal lines, supply and demand zones, whatever your method of identifying support and resistance is, you have to do it, okay? You have to have a really, really thorough understanding of how to identify this thing that everybody keeps referencing to, that they call levels. That's all it is: supply and demand, support and resistance, okay? Call whatever you want. I don't care. But you must be able to identify significant key levels in the market. More often than not, the most significant key levels are not going to come from some computer-generated program or some computer-generated indicator. Okay? You can go to indicators here on TradingView, and you can go to Community, and there are hundreds of, thousands, maybe tens of thousands of all these different things that people have populated. More often than not, the most significant levels are going to be levels that you're going to have to identify. So get used to it. Stop relying, right? Indicators are training wheels. That's what indicators are. Trading software is a training wheel to get you to understand the three extraordinarily key components that you must understand. Levels where price is likely to react, and then you need to identify what the price action and what the volume is doing at those levels. So now you could put together the big picture so you can make a low risk, high probability, educated decision if you are prepared to risk your hard-earned money in the market. So once you have your levels, your support, your resistance, your trend lines, your channel structures all figured out, then you need to piece those very specifically with what the price action is doing at those levels and what the volume is doing. Because believe it or not, without understanding what the volume's doing with the price action at those levels, you're missing a huge picture that will be a game changer in your trading. So that was kind of this back to basics trading 101 lesson. Listen, I see all the stuff people are posting on YouTube. It's fine. Okay. Like, listen, there are great traders out there, amazing traders out there, okay? Making tons of money. And I am extraordinarily happy for them. Okay? I just am. Why am I extraordinarily happy for them? Because I know firsthand the discipline it took for them to get to where they are. That's why I'm happy for them. That's why I'm proud of them. That's why I subscribe to their channel and support what it is they're doing. Because I know how difficult it is to get to where they are. Trading will take you 3 to 5 years of consistent dedication. It's no different than going to college. Except when after 3 to 5 years, if you have mastered this, you will be filthy rich. You will come out of college begging for a job. Very different. Okay? But if you're not willing to invest a postgraduate degree in trading, in understanding volume, price action, support and resistance, those 3 most key components that you have to understand. Doesn't matter if it's a weekly chart or a 5-minute chart. If you don't have 3 to 5 years to invest in this, then I will tell you, and I would advise you to just throw in the towel. Because at the end of the day, if you don't have the time to invest in this, to really understand and master the market, the price action, the volume, the interaction between the two at key levels that must be identified. Guys, when you go to trade, once you've gotten over the hump, okay? Because I'm sure many of you have these screens that are littered with 600 indicators on them, okay? Once you've gotten over that hump, when you go to trade, this is basically what your chart's going to look like. It's going to be empty. Because all those indicators are just going to muddle your thought process. Because more often than not, those indicators aren't really going to do you any great service. Right? More often than not, when I look at a chart that has indicators, I'm like, people send me charts. Hey, can you look at this? Give me your thoughts. Yeah, sure. I don't mind. Send me an email. I'll be more than happy to look at any chart you want me to. I don't care. I don't want your money. Like, I'm more than happy. Send me a chart. Hey, I'm looking at Joe Blow's, Shed LLC in Kentucky. Sure. If it's got a chart, send it to me. I'll take a look at it for you. The fact of the matter is, at the end of the day, this is all you need. This is all that you need. Is just to simply interpret the volume, the price action, support and resistance. More often than not, that's it. Support and resistance can be defined by just a very specific line. It can be defined by an area. It can be defined by a trend line. It can be defined by a channel structure. Okay? Those are, even a gap. Okay? Even a gap, right? Like there's a weekly gap here. If I'm trading this long from here, you can bet your butt I am going to take profits. See that low and that high? Right there is where I'm going to take my first profit. 307. And then where's my second profit? Well, at that magical level, that one single line that we dropped on the chart. And then when I start to see this, that doesn't give me a great deal of confidence that the market's going to go higher. So what am I going to do with my stop? I'm going to probably tighten it up right under this little kind of 3-candle formation here. Because if this isn't going to hold, we're probably going to fall back deeper. But you only get to understand these things by putting the screen time in. That's it. There's no secret sauce, right? I can't teach you I can give you the theory, like I'm giving you in this video, behind it, right? I can give you the theory, give you the practical theory behind doing this. But without doing it in real time, especially if you want to day trade, like you absolutely, without a shadow of a doubt, need to put the screen time in, okay? I watch the market live 6 hours a day, 5 days a week. That's 30 hours a week. 4 weeks out of a month, that's 120 hours a month. Give or take, federal holidays, or if I take a day off for whatever reason. Okay? But I can assure you that I'm watching the market live for over 100 hours a month. Okay? So that's over 1,200 hours a year. Right? Do that for 5 years. That's 6,000 hours of live chart time experience. Don't you think by the time you've reached 6,000 hours of watching a chart that you should have a extraordinary understanding of what's happened, what's happening, and what's likely to happen next? That's it, guys. There is no substitute for screen time, especially if you want to day trade. I'm not trading for 6 hours a day. I'm not. More often than not, when or if I place a trade, I am taking profit in the first 5 to 10 minutes of that trade. My stop's at my entry. And if that trade offers me more because it continues to go in the direction I anticipate to, I will gracefully accept more profits as the market continues in that direction. And if it doesn't, it'll retrace, I'll get stopped out, and I'll be done for the day. Sometimes I'll place 2 trades. I'll never place more than 3 trades a day. That's my rule, okay? I encourage each and every one of you to take the challenge I'm going to describe right now. I encourage you, if I don't know what your broker is, but every brokerage offers it. TradingView, you go to trading panel at the bottom, and there's this thing here called paper trading. Click on that, go into it. I want you to set the account value to whatever you plan on starting off trading. Okay, it could be, $1,000. It could be $10,000. It could be $1 million, or anywhere in between. I don't care. And I want you to implement your trade plan. And during the process of not only implementing the trade plan you have so far, I want your trade plan to continue to evolve until you have doubled that account in the manner of which you plan to trade live money. If you're unable to double that account, trading in the exact manner, position size that you plan to trade your live money, you are not ready to trade live money. Period. End of story. Plain and simple. All of your refinement in your trade plan should be done during that period of doubling that account. So if you're going to start with $100,000 in your account, okay, and you plan to trade with 5 contracts per trade placed if you're trading the futures market, okay, or X amount of dollars based on whatever, you need to take that trade over and over and over, that same setup, following the same plan, following the same checklist over and over and over again until you have doubled that account. If you plan to swing trade on a daily chart or a weekly chart or a monthly chart, same thing. I'm going to start off with a $100,000 account until that account becomes $200,000 by implementing the same strategy over and over and over again. I'm not ready to trade with live money. I can assure you, you have the better chance of joining the ranks of the 5% of profitable traders in existence by first doubling that practice account before ever risking a single live dollar. So with that, guys, I'll wrap up. This video ran longer than anticipated. If you liked the video, please click the like button. If you haven't subscribed to the channel yet, please do so you're notified with new videos. And if you have a question, leave me a comment below. I'd be more than happy to answer it. God bless, and I'll see you in the next one.